Hello and welcome to Stock Market Guruji. We have already uploaded a good number of videos on our channel, and if you haven't watched those videos, I would request you to watch the videos and gain some important insights about those stocks. I've always recommended you to have a basic research about any stock before investing in the stock market. So, through this channel, we'll be sharing plenty of knowledge about how to do a basic research on the stock that you are selecting. And one of the most important parameters while selecting a stock is its RSI index. We have heard other people telling about RSI. But what is that RSI? So in this video, we'll be discussing about the meaning of RSI and what is the level of RSI while selecting a stock. So this is RSI or relative strength index indicator. The relative strength index indicator is a momentum oscillator that measures the speed and change of price movements of a security. Developed by J. Wells Wilder, he introduced RSI in his 1978 book New Concepts in Technical Trading System. So forget all the technical words, jargons, everything. Just first thing to gain from here is that it is an index that while selecting a share, how the speed and change of the price movements are calculated. RSI is the indicator to show that. So RSI basically oscillates or it moves from 0 to 100. So RSI index can be anywhere from 0 to 100. And how to choose a stock? Suppose one stock is having an RSI of over 70. That means that the stock is in overbought zone. That means many people are showing keen interest in that stock. So more and more people are getting that stock in their portfolio. So what happens when a stock becomes overbought? There is definitely a tendency to be in the coming days to sell those stocks, to dump those stocks. So when the RSI index of a stock it exceeds a certain value, there is a growing tendency that there is a growing probability that in the coming days that stock will be sold by many of the investors and the value might come down. So RSI is practically a wonderful indicator to show when to buy a stock. When the indicator is above 70 for a particular stock, it is considered overbought zone. Whereas when the indicator is below 30, it is in oversold zone. So consider a stock is having an RSI indicator of around 25. Now the a company is doing good in other parameters. It has given good quarterly result. Its profits are consistent and it is having an RSI of around 25. So what you can infer from this? This means that the stock has been sold like anything in the previous few days, and if you get this stock, there is a chance that it will show a momentum or a rise in its value in the coming days. So it is very important when people trade a stock. For example, if you are doing a short term trading, RSI is going to play a very key role. Or you can see this helps in knowing the general trend of a stock. The default setting used for RSI is 14 days period for daily charts, also known as look back period. So RSI is practically set in a period of 14 days, and after 14 days, so on the 15th day, the RSI, whatever RSI of a stock is, you cannot compare it with the 13th day because a new cycle has started. It has started a fresh trading and you cannot compare it with its RSI value in the previous week. So this is called the look back period. In case you are analyzing hourly chart, period is 14 hours. formula used to calculate RSI. This is very, again, this is not going to do you any favor. There is nothing in memorizing such formulas, but basic concept is that RSI has to be somewhere between, it should be an average between the oversold or overbought zone. If a good stock, if you're going to purchase a stock for maybe 3, 4, 5 days, and you are checking the RSI of that stock, it is better that the stock is somewhere around 50. So I can give you one example. I was trading in Adani Power, and I was just checking the RSI every now and then, and just when I think it reached a value of something around 162, 64 rupees, and immediately I checked the RSI indicator of that stock, and I found it around 94, and I didn't have any intention to hold it for a long time, or I didn't want to invest in Adani Power for a long period. That is why at that moment I decided that I should sell this stock, because it is getting very risky. There can be a slide any moment, and immediately I sold that stock. And what happened, within half an hour I started seeing that the stock price started coming down. So just by studying the RSI indicator of Adani Power, I saved myself from big loss. And you can check even today that Adani Power has not gone after that. So RSI is a very good indicator to study a stock. And let's do a practical examination. Let's take one share, Tata Motors. What is the RSI? RSI of Tata Motors. Tata Motors. See, RSI is 59.6. Tata Motors RSI, that is 14. This is running in the 14th day, and its RSI is 59.6. So it is somewhere between, like, it's still a very in a good stable zone, and you can still go ahead for this if you are trading for this stock, and till it reaches 70. After 70 it starts becoming in the overbought zone, 80 very highly overbought, and 90 extremely risky, over 90 extremely risky overbought zone. So presently Tata Motors is having an RSI index of around 59.6, which I think is a fair RSI for buying this stock. Let's look at another RSI of Tata Chemicals. Tata Chemicals. See, RSI of Tata Chemicals is 62.1. So it is also in a very viable zone. Tata Power 73.4. So this is an example. See, Tata Power is presently having 73.4. Tata Power presently trading at something around 250 rupees. So it shows that it is in an overbought zone, and there might be a tendency that this stock will be sold in the next coming days. So this is how we check the RSI. And if you are purchasing, suppose Ashok Leyland, today only we have given a video of Ashok Leyland. Now let's check the RSI of Ashok Leyland. See, it's not in overbought or oversold zone. So let's check another RSI, Infosys. 45.3, very much viable zone, because we saw there was a tendency of selling the stock in the past few days. So it's presently in 45.3. So this is all about today's video. We have understood how to check a stock, analyze a stock by seeing the RSI of that stock. So once again I will remind you, RSI is relative strength index of indicator of a stock. So this is all about today's video. We'll meet you in the next video with another new topic, a very interesting topic to understand or analyze a stock. Thank you and goodbye till then.